I don't know, maybe. And then people are like, no, we're going to have all these chains, all these L1s, and we're going to have links or bridges. Like, but the bridges suck, and that's where all the exploits. Oh, but then Chainlink says, oh, well, we fixed that. Maybe. Okay. But I'm starting to lean to the one chain to rule all chains, like Bitcoin. And then we have L2s and L3s and L4s, kind of like Gold and Fedwire and ACH and Visa Network.
Hey guys, welcome to Everyday Finance. A US recession in 2025 may be more likely than anticipated, according to a number of economic indicators. According to the most recent model projections from the Atlanta Federal Reserve, fresh economic data may reduce GDP growth in the first quarter of 2025. Though they could alter, these forecasts show a slowdown in economic growth. Warning indicators such as the yield curve reinversion, which shows that 10-year government bond yields have dropped below 3-month borrowing, a trustworthy recession indicator, lend credence to this worry. Uncertainty was increased in February when consumer confidence fell, according to the Conference Board. Despite a stable job market, the U.S. Bureau of Labor Statistics reports weakening hiring trends. Prediction markets such as Key have raised their 2025 recession and forecast to 40% in recent weeks. According to managing partner and CIO Mark Yusko of Morgan Creek Capital, asset prices may suffer in the upcoming recession. Because China and the United States are putting liquidity into their economies to keep them from collapsing completely, Yusko is optimistic that any downturn will be short. Treasury Secretary Scott Bessent has confirmed that the Trump administration will cut interest rates because the United States cannot refinance its national debt. Plans to invest at least $55 billion in major banks have already been announced by China. Since cryptocurrencies have performed well in comparison to central bank balance sheets, Yusko anticipates that these actions will increase asset prices in the upcoming months. To receive updates, like, share, and subscribe to the channel.
It's really hard in my mind to have a chain that isn't proof of work be a reserve asset. That doesn't mean a non-proof of work chain can't do other things in the decentralized world that we're moving toward. But a permanent, immutable, purely decentralized chain, for me, like if I own anything of value, I won't say it's silly, but I have a PFP, right? I'm part of the on-chain monkey community, and I love the on-chain monkey community. So I don't mean to say it's silly, but some people think PFPs are silly. Some people think NFTs are silly. I think NFTs are amazing, right? Non-fungible token just means a line item on a ledger. I think every asset, every stock, every bond, every currency, every commodity, every piece of art, every piece of real estate, every private business, everything, every collectible will ultimately be an entry on a ledger, an NFT. Now, I would like to call it personal property rights or digital property rights instead of non-fungible token, but we are where we are. But I have that thing, and it's a one of one, and there are only 20 out of this 10,000 collection. So, now people say, well, who cares? They're ugly. Whatever. Everyone's entitled, no accounting for taste. Art is a unique thing. I like the picture behind me. Some people don't. And it is a one-on-one. So to me, it has value. But ultimately, I don't know if you saw the video of the kid that opened the Lord of the Rings one-of-one Magic the Gathering card.
No.
Like literally, Magic Gathering cards are cool and some of them are valuable. And, they did a collab with the Lord of the Rings, and they printed one card with the ring. And this kid opened it and his hands shaking because it's $2.5 million. You're like, no, it's a piece of cardboard. There are people who would pay him on the spot $2.5 million or more to have that one of one. It's like, why are sports teams worth so much? Because they're scarce. But long story short, where do I want my scarce assets in the digital realm? Do I want them on a chain that's a pointer to an AWS server. Mm-mm. I want them on a chain where they're on chain, verifiable by proof of work. So for me, do we get to using the Lord of the Rings? I used to have this view that, in Web 1, we have 5, and Web 2, we have 5 protocols. We got TCP/IP, which you and I are using right now to talk. We have FTP to move files. We have HTTPS for websites. We have SMTP for email. And then we got www that ties it all together. I was like, well, in Web 3, are we going to have that same kind of 5? And is Bitcoin the base layer? And is Filecoin like FTP? And is Ethereum like www dot? But then it kind of breaks down. It's like, what's email? Is that Cosmos or Polkadot or Solana? I don't know. Maybe. And then people are like, no, we're going to have all these chains, all these L1s, and we're going to have links or bridges. But the bridges suck, and that's where all the exploits. Oh, but then Chainlink says, oh, we fixed that. Maybe. Okay. But I'm starting to lean to the one chain to rule all chains, like Bitcoin. And then we have L2s and L3s and L4s, kind of like Gold and Fedwire and ACH and Visa Network.
President Donald Trump signed an executive order Thursday to establish a strategic Bitcoin reserve, requiring a full audit of federal digital asset holdings and prohibiting Bitcoin sales. The Treasury Department will manage the U.S. digital asset stockpile established by the executive order. Following the announcement, White House crypto and AI czar David Sachs posted more details on social media. He said, President Trump signed an executive order to create a strategic Bitcoin reserve moments ago. This reserve will be funded by federal Bitcoin, mostly from criminal and civil asset forfeiture cases. Importantly, taxpayers will pay nothing. An estimated 200,000 Bitcoin are owned by the U.S. government, but no full audit has been done. The executive order requires a complete federal digital asset accounting. Bitcoin in the reserve will not be sold by the U.S. government. Apart from Bitcoin, the executive order creates the U.S. digital asset stockpile, which includes digital assets forfeited in criminal or civil proceedings. After forfeiture, the government will not acquire more assets. The stockpile ensures Treasury Department-managed asset stewardship. Another major development is the White House's first crypto summit on Friday. The event will be led by President Trump and feature digital asset leaders like Michael Saylor, Brad Garlinghouse, Fred Thiel, Tyler and Cameron Winklevoss, and Brian Armstrong. How do these developments affect Bitcoin and the digital asset market? If you liked this video and want more, like, subscribe, and turn on the notification bell for updates.
There's a world, I don't want to live in this world, but there is a world like where electricity doesn't work and the internet's down, where having physical gold, like the Mad Max kind of thing, I don't really want to live in that world. But there is there are stores or people, getting out of a war-torn country by, giving people their earrings. And look, physical gold has a role, and it has had a role for 5,000 years. I mean, it's not an accident that it's been a perfect store of value. In a single ounce, this is a crazy thing, a single ounce would buy you a fine person's suit for 5,000 years. From Cleopatra's time to a suit of armor to a zoot suit in the 20s to Savile Row today. You go to Savile Row, you give them an ounce of gold, and they'll give you a very nice suit. Man or woman, doesn't matter. So that's real. So you can have both. But if you think about a strategic reserve, ultimately, you want to have real assets that are scarce, provably scarce. And that's why we use this thing stock to flow, which means the flow of an asset relative to its underlying stock, you want to be low, or you want the stock to flow to be very high. And the amount of gold that's produced every year roughly equals the amount that's lost or stolen or used in industrial purposes. So the stock to flow is very high. Bitcoin's is actually a little higher because we provably know how many new coins are going to be created for the next 140 years before they stop being created. And then we go to transaction-based. So this provably scarce asset that is digitally superior, right, more divisible, more portable, is the next 5,000 years or 10,000 years or however long we survive as a species. But I I don't think we need to ditch physical gold. I have a little bit of both. I have more Bitcoin than gold, but um, and I like Bitcoin because it is not only an amazing store of value, but it actually is. People say, well, it does. It doesn't do what it said it was going to do. The white paper.
Yep.
Peer-to-peer electronic,
Payments.
digital electronic cash system. Well, no, it is. If I want to send you value, I can, with a couple clicks on a phone, send you Bitcoin through the network, no peer, and it's peer to peer. Meaning, if I want to send you money, I have to have a bank account, you have to have a bank account, and we pay a wire fee. And because it's across international borders, because you're in Canada, at least international for now, right? We have to pay the Rothschilds because their BIS has to get paid because of a 400-year-old treaty, which seems silly to me. But that's crazy when I can use this technology, better technology. And look, the banking system that everybody hates, right? Oh, fractional reserve banking, it's awful. I ask people all the time, name a place you would live that has a bad or absent fractional reserve banking system. I'll wait because you can't do it. And so banking is not the devil. It's the extraction of fees for trust. That's the devil, right? 7 trillion with a T. And no one even knows what a trillion is, right? But a trillion, you and I would have to sit here and talk for 31,710 years. And as much as I enjoy in this conversation,
I'm not offended,
painful,
Mark.
right? And we have to spend $1 a second. That's 1 trillion. So 7 of those babies are extracted from us around the world for trust. And I use a simple example all the time. So let's say I lent you money back, and I'm old. So I write my papyrus tablet that you owe me $100. You come back a year later to pay me 110, and I'm an unscrupulous guy. I was untrustworthy. I changed the number from 100 to 200. You come back to pay me. I say you owe me 220. You trusted me. That was a mistake because the ledger says 200. So the Medicis, 838 years ago, came in and said, well, Jay, you keep a ledger. Mark, you keep a ledger. And we, the benevolent Medicis, for a small fee, will make sure the ledgers match. But here's the thing. While you're away working for the 110, I go to the Medicis and I say, you know what? I'm going to change mine to 200. I'm going to give you half. They're like, done.
Sounds
easy.
good.
So you come back to pay 110. I say 220. Hey, Medicis. And they're like, I'm sorry, Jay, you must have written the number down wrong. So we shouldn't have trusted them. And look, the trust system has worked really well most of the time, except for when the banks get fined, for 838 years. But now we don't need trust. Now we have truth. We have a third ledger, this permanent, immutable, beautiful ledger, verified by proof of work, where we're converting energy into value, which is what we do every day, right? Fuel our bodies, make value. So that's what life is about. And now we have this perfect immutable ledger that says, Mark writes down 100, Jay writes down 100, ledger writes down 100, 51% say, yep, that's what happened. Can't be changed. I can't change it. I can't say, no, it's 220. You come back, pay me the 110, and we're done. Truth is better than trust. And truth is free-ish. It's not completely free, but the people who get paid are the people securing the network, the miners, through this thing called block rewards and transaction fees, rather than you and I paying the trust institutions to guarantee that the money is where it is.
President Donald Trump signed an executive order Thursday to establish a strategic Bitcoin reserve, requiring a full audit of federal digital asset holdings and prohibiting Bitcoin sales. The Treasury Department will manage the U.S. digital asset stockpile established by the executive order. Following the announcement, White House crypto and AI czar David Sachs posted more details on social media. He said, President Trump signed an executive order to create a strategic Bitcoin reserve moments ago. This reserve will be funded by federal Bitcoin, mostly from criminal and civil asset forfeiture cases. Importantly, taxpayers will pay nothing. An estimated 200,000 Bitcoin are owned by the US government, but no full audit has been done. The executive order requires a complete federal digital asset accounting. Bitcoin in the reserve will not be sold by the US government. Apart from Bitcoin, the executive order creates the US digital asset stockpile, which includes digital assets forfeited in criminal or civil proceedings. After forfeiture, the government will not acquire more assets. The stockpile ensures Treasury Department-managed asset stewardship. Another major development is the White House's first crypto summit on Friday. The event will be led by President Trump and feature digital asset leaders like Michael Saylor, Brad Garlinghouse, Fred Thiel, Tyler and Cameron Winklevoss, and Brian Armstrong. How do these developments affect Bitcoin and the digital asset market? If you liked this video and want more, like, subscribe, and turn on the notification bell for updates.